What's up, guys? Alvaro here, and welcome to the Bilingual Stock Market channel again. Let's go ahead and talk about some stocks and about what happened today in the markets. And the markets went down today, guys, with the Russell 2000 going down 2.27%. Nasdaq went down 1.71%. Dow Jones went down 6 points, not a lot. It pretty much broke even. And the S&P 500 went down 0.72%. If we take a look at the advances and declines distribution, we can make the case that today we had a broad negative day all across the board. Take a look at the advancers today. So we had, for the most part, 1,800 stocks going up, whereas we had 5,500 stocks going down today. And if we take a deeper look at these advances and declines distribution, take a look, guys, at how almost 1,900 stocks dropped today, somewhere between 2 up to 5%. So we had a nasty day, no doubt about it, when it comes to most of the stocks out there. And if we take a look at the sectors, then the same situation happened with most, relative to most of the performances that we saw in most of the stocks out there. And why? Well, because 9 out of 11 sectors of the S&P 500 went down today, and we only had 2 very defensive sectors going up today, such as consumer staples, which went up 0.27%, and healthcare, which went up 0.22%. If we take a deeper look, guys, at what happened today in the sectors, check this out. So, the 3 best performing sectors today were consumer staples, which went up 0.27%, healthcare went up 0.22%, and utilities went up. It didn't go up, actually. I take that back. Utilities went down 0.12%, but these three sectors were the best performing sectors today. And all of these 3 sectors are defensive sectors, guys. Consumer staples, healthcare, and utilities. These are sectors that pretty much develop their business models, let's say selling stuff that most people have to buy regardless of whatever is going on in the economy. So that's why they are, let's say, classified as defensive sectors. And something that caught my eye today is that the markets are kind of uncertain when it comes to the possible outcome of the CPI data report tomorrow, guys. And why? Well, because if tomorrow we happen to have a worse than expected CPI data report, the sector that is going to benefit the most of such situation, a hotter than expected CPI data report, is going to be the financial sector. And the financial sector actually went down today 0.20%. And the sector that should benefit the most of a better than expected CPI data report should be the tech sector, which went down today 1.08%. So the markets are undecided, guys. So I can tell that since they went after defensive sectors today and they didn't pick any side when it comes to the financial sector or the tech sector, so we are, for the most part, or the markets are for the most part, expecting any possible outcome tomorrow when it comes to the CPI data report. And speaking of the devil, when it comes to the CPI data report, so we are waiting, or the markets are expecting an increase year over year. You guys know that in October, the inflation increase year over year was of 6.2%, and tomorrow we are expecting an increase year over year of 6.7%. So the main focus of the markets is going to be the increase month over month. In October, the increase month over month was was at 0.9%, and tomorrow we are expecting an increase month over month of 0.7%. So that is going to be definitely a market mover. If we happen to have a way worse than expected CPI data report, the inflation trade should have a very solid day tomorrow. When I talk about the inflation trade, I am talking about financials, industrials, materials. And on the flip side, we should see an acceleration of the pain over higher multiple stocks and small cap stocks. And obviously, guys, if tomorrow the CPI data report happens to come out worse than expected, then we are very likely to see Mr. Jerome Powell next week on Wednesday on the Federal Open Market Committee. First of all, saying or letting us know that the Federal Reserve is going to speed up the tapering process, which is something that the markets are okay with. We can make the case. But what is really spooking the markets is the possibility of having the hawk, the new hawk, Jerome Powell, next week, letting us know that the Federal Reserve might hike interest rates sooner than expected. I have already told you that what the markets are waiting for is the first interest rate hike to be carried out in June of next year. So what happens if Jerome says that the first interest rate hike is going to be carried out in March? That would imply that there won't be any Christmas presents under our Christmas trees this year, guys. No Santa Claus rally. Today we had the jobless claims coming out at 8:30 a.m. Eastern Standard Time, and jobless claims was actually good news for the markets. It came out at 184,000 new claims, which is a 52-year low. Good news, but the markets decided to sell off because basically everything is going to be decided tomorrow once the CPI data report comes out. And before going over the indices, I want to show you guys some trades that I closed in today's trading session, and I want to start out with Ginkgo Solar, guys. So let me show you over here. Lucky enough, guys, I decided to close all of my trades early this morning because we saw some sort of a opening rally for the first 30 minutes of the trading session, and then we started to go down. So in the case of Ginkgo Solar, I purchased 100 shares yesterday at $47.74, paying $4,774, and today I sold out of these 100 shares at $49.51, and I was paid $4,951. I ended up making over here $180. Another trade that I closed today was on Matterport. I stock that, by the way, we broke down here on the channel on Tuesday, I think. And in the case of Matterport, I already opened a new position, by the way. So on December 7, I purchased 150 shares at $25.99, paying $3,898, and today I sold out of these 150 shares at $27.28, and I was paid $4,091. I ended up making over here $193, and I decided today, guys, and taking advantage of the drop of the market to close, or I let's say took advantage of the volatility of the market to buy back two covered calls that I had sold. The first one, Tesla. You guys know that Tesla has become a part-time job for me. So check this out, guys. On December 7th, I sold the $1,250 call that expires on December 23rd, and I was paid way back then $785. And today, since Tesla dropped like a rock, no new stock split, that was pretty obvious. I already told you guys that having carried out a new stock split would have been absolutely insane. So I was pretty confident that Tesla wasn't going to carry out a new stock split. So I think that for the most part, many people basically sold the news, and I took advantage of that. So I was paid $785, and today I bought back this call option that I sold, and I paid $410. So I ended up making, in a matter of only 2 days, I ended up making over here $375. And I also bought back a covered call that I had sold on Lucid, guys, which is another stock that has been getting killed. We are going to go over Lucid in today's video. And they are basically carrying out a public offering, and that's the reason why the markets are punishing Lucid. So on December 6th, I sold the $52 call that expires on December 31st, and I was paid $310. And today I decided to buy back the call that I sold, and I paid $126. I ended up making over here $184. So today I made $932 approximately, buying back these two covered calls and closing my positions on Jinko Solar and Matterport. I had a very solid day. I have absolutely nothing to complain about. Okay, now let's go ahead and take a look at the S&P 500 and the Nasdaq 100. This is Lucid. We're going to go over Lucid in just a second. So S&P went down today 0.72%, and it closed today's trading session at 4,667 points. In strict technical terms, guys, clear uptrend. We are still trading above the moving averages. The relative strength index is at 55 points. The only, let's say, aspect that I didn't necessarily like about today's close was the fact that the bulls couldn't hold 4,670 points, which happens to be a previous area of support that acted on 3 occasions back in November. So that's something that we can, define as a negative aspect of today's trading session close. But other than that, guys, we just saw a small pullback inside an uptrend. So the only way that the bears can, let's say, try to take control of the S&P 500 would be taking on this 50 SMA on the 4-hour chart at 4,650 points. But we are not there yet. And let's say that tomorrow the CPI data report happens to come out worse than expected, guys. I don't know. We might have a situation, and this is something that I told you guys about in the video that we posted on Tuesday. Now we are in a tricky situation because, listen up, guys, if tomorrow we happen to have, as I just told you, let's say a way worse than expected CPI data report, then obviously the financial sector and the inflation trade should have, a very solid day tomorrow. And obviously, most of the higher multiple stocks and small cap stocks are going to be decimated. We can expect the Russell 2000 to take a huge hit. However, the new blue chip stocks out there, guys, are the Googles, the Amazons, the Teslas, the Apples, and the Microsoft of the world. So if the markets tomorrow decide to go after, the big tech names, and at the same time they also purchase or decide to invest in the inflation trade, including the financial sector, which is a very important sector inside the S&P 500, then we might have a day tomorrow in which the Russell 2000 and most of the higher multiple stocks are going to get absolutely killed, but we might still see the S&P 500 going up if the big tech names happen to have an acceptable day, and if the financial sector happens to outperform the rest of the market. So tomorrow is going to be kind of a tricky day. I am very concerned on a way worse than expected CPI data report about higher multiple stocks and about small cap stocks. But I think that for the most part, most of the big tech names are going to do well. And now let's go ahead and take a look at the NDX. And in the case of the Nasdaq 100, it went down today 1.49%, and it closed today's trading session at 16,149 points. And take a look, guys, at how the bulls of the NDX couldn't hold today this 50 SMA on the 4-hour chart. I am actually going to zoom in here on the 4-hour chart. So this is a bit bearish, let's just put it that way. So if tomorrow the big tech names happen to take a hit on a worse than expected CPI data report, which is something that I am not really sure about, because in general, let's say markets psychology, then the big tech names should also be affected, guys, by a worse than expected CPI data report. But since now we are seeing that the markets are considering the big tech names as the new blue chip stocks out there, so I am not really that sure. However, inside the Nasdaq 100, and despite the fact that the big tech names could be potentially doing the heavy lifting in case of a nasty CPI data report, we might see a lot of pain, guys. When it comes to the other stocks that trade inside the Nasdaq 100, that don't have the market cap, the weight in terms of market cap that the Googles and the Amazons and the Microsoft of the world have. So if tomorrow the NDX happens to pull back, I am going to keep a close watch on 16,000 points as the very first line of defense for the bulls. 16,000 points happens to be a former area of support back from November 24th and also back from November 12th. And in terms of going up, let's say that we have a better than expected CPI data report and everything goes very well for higher multiple stocks, small cap stocks, and obviously the NDX. So the main area of overhead resistance that we need to keep a close watch on is going to be 16,300 points, which happens to be a former area of support back from mid-November and also an area of support back from early November. But other than what I am telling you guys, we are still on a clear uptrend. We are trading between the moving averages. So as I just said, we can make the case that the Bears had a small victory today because they were able to take on this 50 SMA on the 4-hour chart, but the relative strength index is at 48 points. And I think that the big tech names are going to do pretty well regardless of the result of the CPI data report tomorrow. And now let's go ahead and take a look at the first stock of this video. By the way, I didn't say anything in the introduction of this video. Today I am going to go over 5 stocks. So Chewy was reporting earnings, and I think that, oh boy, take a look at this. Such a drop, guys. Wow, what a tough year for Chewy, huh? So Chewy went down today 6.32%, and it closed today's trading session at $56.30. And let's see what is going on over here on the 1-day, 1-minute chart. So get this, guys. Chewy goes down today 6% during regular trading hours. And after hours, it is down 8%. So we can make the case that Chewy went down today 15%, no problem. So what happened over here with Chewy? So let me see if I have the information available. So Chewy Q3 sales came in at $2.21 billion in line. Here it says, but I don't have the estimate. So let's see. Chewy shares are trading lower after the company reported Q3 earnings results. Yeah, I already noticed that. Thinkorswim. Come on, give me the numbers. Let me see if I can pull up here any news. Okay. So let's see what happened here. Chewy reported a net loss of $32.2 million compared with a net loss of $32.8 million a year ago. On Q3 of last year, net sales climbed 24% to $2.21 billion from $1.78 billion a year ago. Analysts surveyed by FactSets had expected a net loss of 8 cents a share on revenue of $2.2 billion. So, but I don't have the estimate, guys. It looks like the estimate on sales was at $2.2 billion, and Chewy reported $2.21 billion. But I don't have the estimate when it comes to EPS. So unfortunately, guys, I don't have the information complete over here. So I'm gonna have to take a deeper look at this earnings report later on today. So let me pull up here the 4-hour chart, and this looks obviously, guys, like a falling knife. Let me see if I pull up here the 1-year chart. No, I don't have any let's say technical previews, any previous technical reference in terms of support. Let me look for the 3-year chart. So if Chewy keeps on dropping tomorrow, I am going to draw a line over here. Let me see. It is trading at $51. No, not even this, guys. Let me see. Chewy is trading at $51.60. So if I draw a line over here on the 3-year chart, we can make the case, guys, that $51 is a previous area of resistance back from June of 2020, and it is also a previous area of support back from September of last year. So we can expect Chewy to find a good support over there at $51-ish. But obviously, guys, this is an ugly looking chart, and I am not going to touch Chewy at these levels by any stretch of the imagination. I would have to see Chewy maybe bursting above this 50 SMA on the 4-hour chart near $64, which also happens to be a former area of resistance back from mid-October. But yeah, this is a nasty chart, guys, and I need to take a deeper look at the earnings report of Chewy because the information that Thinkorswim is showing as of now isn't complete. And Chewy is very oversold, guys, with the relative strength index at 18 points. So we can make the case that maybe $51, which happens to be a previous area of support and resistance from last year, might potentially provide a good support. So, wow, another stock that dropped like a rock after having reported earnings, and another stock that fell like a brick, guys, was Lucid Motors. Take a look at this. Lucid went down today 18.34%, and it closed today's trading session at $36.52. And why did Lucid Motors fell like this, guys? Basically because they are carrying out a new public offering. I think that Lucid has raised money before by issuing new shares. So remember, guys, when any company carries out any public offering, they are basically issuing new shares in order to raise capital. So in the short term, that's bad news because the already existing shareholders are being diluted, and the stock of any company that raises capital by, let's say, via a public offering, then has to deal with a lot of downwards pressure in the short term. However, from a long-term perspective, that's good news because that implies that, in let's say normal conditions, any company that is raising money is going to reinvest that capital into the business model of that company, and that's good news from a long-term perspective. However, it looks like Lucid shook off a lot of potential, long-term investors. The second Lucid broke $43, panicked sold Lucid. So Lucid isn't looking any good over here, guys. I actually own some shares because you guys know that I have been selling covered calls of Lucid. So let me show you the position that I own as of now. I am going to keep on selling covered calls over here. I think that this company is here to stay. What is going on with Lucid? Come on, give me my short Robinhood so I can show you guys my current position. I don't know, something is wrong with Lucid. Okay, long story short, I own 100 shares at an average cost of, $46 or $47. So I am not freaking out. I am going to keep on selling covered calls. And is this public offering going to, let's say, become a turning point in the case of Lucid? Can Lucid go any lower? Of course it can. I think that the worst case scenario would be $28, guys, which happens to be a former area of resistance back from late October, also back from late September, and also back from mid-September. $28 is a very important area in technical terms for Lucid, so I don't think that Lucid is going to go any lower than $28. However, in the short term, we can see that the relative strength index of Lucid is signaling 28 points, so Lucid is very oversold. This was an overreaction of the markets. I think that any public offering is good news for any company out there. And let's see if Lucid can reverse this horrible downtrend that you guys can see over here in the 4-hour chart. And if so, guys, I might be adding more shares to the position that I have as of now on Lucid. The second Lucid takes on $43.50. $43.50 happens to be a former area of support back from mid-November, also back from mid-November and early November as well. Let's just put it that way, guys. And mind you, if Lucid happens to take on $43.50, this might be a momentum trade. I might actually start another trade on Lucid because, guys, from $43.50-ish up to this 50 SMA on the 4-hour chart at $48.40, which happens to be a former area of support back from late November, we are looking at a 10% profit. So obviously, the fact that the bulls couldn't hold this 180 SMA on the 4-hour chart today is a bad sign, so clearly Lucid can keep on going down. I think that if so, the first line of defense for the bulls of Lucid is going to be $33, which happens to be a former area of support. This is back from, oh, sorry guys, I lost here. So $33, as I was saying, happens to be a former area of support back from early November. And if $33 happens to be broken to the downside, then I think that Lucid is going to find a bunch of buyers at $28, as I just told you. However, if this downtrend happens to be reversed, then watch out for the bulls of Lucid taking on this 180 SMA on the 4-hour chart. And at the same time, they are going to be taking on $53.50, and maybe then being able to fill this next gap up to this 50 SMA on the 4-hour chart near $48.40. And now let's go ahead and take a look at Roku, guys, the talk of the town yesterday. So what happened in the case of Roku? Roku went down today 8.20%, and it closed today's trading session at $235.09. And take a look at the relative strength index of Roku down here, guys, because Roku yesterday went too far too fast on the news that they renewed a contract, a multi-annual contract with Google in order to keep on having available YouTube on Roku. Good news, definitely, because nowadays pretty much everyone is watching YouTube. On either their cell phones or at home using Roku or any other streaming service. So obviously Roku got extremely overbought, and now we saw a healthy pullback, guys. Take a look at the relative strength index, which is sitting as of now at 54 points. So I'm thinking, guys, that $238 is a very interesting spot in order to keep a close watch on Roku. And why? Well, because $238 happens to be a former area of resistance back from November 26th, and since Roku is no longer overbought, so I'm thinking that if the bulls can take on this area at around $238 on good volume and momentum, they might be able to fill the next gap up to $266 once again, guys. So check this out. If we happen to take a momentum trade, let's say once we confirmed from a technical standpoint that the bulls of Roku already took on $238. So from $238.50 or $239 up to $266, we are looking at an 8% profit. So don't sleep on Roku, guys. Watch out, because maybe momentum isn't gone. And I really believe that if $238 happens to be taken on, then the bulls of the stock of this company have a first shot of filling the next gap up to $266. That, by the way, is the area in which the bulls were rejected today. And after having been rejected, we saw a massive drop of almost 11%. So watch out for Roku, guys, breaking out of $238 per share. And now let's go ahead and take a look at the second to last stock of this video, Meta Platforms, former Facebook, ticker symbol FB. And in the case of Meta, guys, The stock of this company went down today 0.22%, and it closed today's trading session at $329. And take a look, guys, at how the bulls are trading as of now, is slightly below this 180 SMA on the 4-hour chart at $331. And if we take a look at the relative strength index of Facebook, it is at 59 points. So this might be potentially be an easy trade, guys. If tomorrow I happen to see the bulls of Meta platforms taking on this 180 SMA, and as I always told you guys on good volume and momentum, I'm thinking, guys, that maybe the bulls of Facebook or Meta platforms are going to be able to fill the next gap up to $344. $344 happens to be a former area of resistance back from mid-October, and at the same time we are also talking about a former area of support back from early July. So I think that Facebook is about to break out, guys, and if we happen to be able to take this trade the way that I am describing it, let's say picking up some shares of Facebook at $332.50, and if we can write up our shares up to $344, we are looking at a 3.50% profit, nothing to sneeze at. So watch out for the bulls of Facebook potentially taking on tomorrow or in the course of the next days this 180 SMA on the 4-hour chart near $331 and filling the next gap up to $344. And now let's go ahead and take a look at the very last stock of this video, AMC Entertainment. And in the case of AMC, the stock of this company was once again obliterated today, going down 8.93% and closing today's trading session at $29.46. And this is this would be potentially another easy trade, guys. Take a look at how the bulls of AMC were rejected today right at this 50 SMA on the 4-hour chart. Not only today, but also yesterday. So this 50 SMA on the 4-hour chart is acting as a critical resistance for the bulls of AMC. So $28 has been a very important area of support for AMC before. So let me show you guys. $28 happens to be a former area of support for AMC from August 5th. So we are talking about an area that already provided a good support for AMC a few months ago, and it actually did it recently, guys. Take a look at how $28 acted as lower support on December 6th, and it also did it back on December 2nd. So I'm thinking, guys, that any visit of AMC down to $28.20, $28.30 might be bought up. And if AMC happens to find a good support at this area, then this is buying zone, guys, because we might see a bounce back up, in which case the bulls of AMC might be potentially filling the next important gap up to $36. $36 happens to be a former area of support back from November 26th and also back from November 10. So let's say that AMC happens to retrace down to $28.30. If a good support happens to be found over there, which might be the case, take a look at the relative strength index of AMC. It is at 38 points. It is already a bit low. And if we can pick up some shares, as I just said, near $28.30, $28.40, and if we can write our shares up to $35 or $36, then we are looking, guys, at a trade that would leave us a 20% profit. This is no joke, guys, so watch out for AMC. $28 is a very critical area of support in technical terms. So if $28.30 happens to keep on providing a good support for AMC, I might be a buyer at around that price. And with AMC Entertainment, I am going to wrap up this video. Thank you very much for your attention, and thank you very much for hanging out with me once again. Remember and keep in mind, guys, that here on the Bilingual Stock Market channel, we are posting stock market update videos Mondays through Thursdays, 3 or 4 hours after the market closes. So if you want to get all of the notifications of all of our videos in a timely manner, you have to be subscribed to this YouTube channel, but you also need to activate the notification bell right up there. Follow us on Instagram as well, guys, at Bilingual Stock Market. And remember that this is the Bilingual Stock Market channel, the YouTube channel in which we talk about the markets, but we do it in English and Spanish as well, so you can pick your preferred language. But most importantly, this is the YouTube channel in which we know that the wonderful world of Wall Street is not for geniuses, it is for entrepreneurs, just like you guys and myself. My name is Alvaro, and I will see you guys on Monday once again, 3 or 4 hours after the market closes. Peace out.